The Iraqi dinar is sending subtle but meaningful signals today, and those who understand financial cycles are paying close attention. While headlines remain calm, smart money is watching the quiet alignment happening beneath the surface. The official exchange rate continues to hover around the central benchmark, near 1,300-1,320 EQD per US dollar, while local market rates remain slightly higher, often ranging between 1,420 and 1,450 IQD depending on region and liquidity. This gap is not chaos. It reflects managed control, currency discipline, and an ongoing effort to balance internal demand with external stability. What stands out is not volatility but consistency. At the same time, global indicators such as oil prices holding near the mid-$70 range, stable regional trade flows, and controlled inflation signals are reinforcing Iraq's financial posture. Gold remains firm, global dollar strength is steady, and emerging markets are showing selective resilience, all of which shape how the dinar is positioned within the broader financial system. Smart money watches patterns, not noise, and the pattern here suggests calculated movement rather than reaction. When a currency maintains structure while global markets fluctuate, it sends a message of internal control. This is especially important for a country balancing reform, trade alignment, and long-term economic confidence. The dinar today is not chasing momentum. It is holding ground, and that in itself is a signal. Experienced observers know that stability often precedes opportunity, not the other way around. The absence of sudden spikes or panic-driven drops reflects a controlled environment where decisions are guided by policy, not pressure. As international markets digest interest, rate expectations, and geopolitical adjustments, Iraq's currency remains measured and deliberate. That calm posture is precisely what smart money monitors. Because true financial shifts rarely announce themselves loudly. They begin quietly, with discipline, consistency, and strategic patience shaping the path forward. What makes the current Iraqi dinar situation especially noteworthy is how it aligns with broader regional and global financial movements without being pulled off course. While major currencies such as the US dollar remain strong due to interest, rate positioning, and global demand, and while the euro and pound continue to face mixed economic signals, the dinar has maintained a controlled and measured posture. Official banking channels continue operating near the established benchmark around 1,310 EQD per dollar, while local market trading reflects modest pressure in the 1,420 to 1,450 range, a spread that reflects regulation rather than instability. This type of pricing structure is often seen in developing financial systems that are tightening oversight while gradually increasing transparency. Meanwhile, oil prices, which remain a central pillar of Iraq's economic framework, continue to trade in a relatively stable band, supporting government revenues and reinforcing fiscal confidence. Gold prices remain elevated globally, signaling cautious investor behavior yet not panic. This combination of stable commodities, steady dollar strength, and controlled local currency movement creates a balanced environment rather than a reactive one. Smart money pays attention to these relationships because currencies do not move in isolation. They move in response to systems. When oil revenues are predictable, reserves are managed, and exchange mechanisms remain disciplined, currency stability becomes sustainable rather than artificial. What we are witnessing now is not a push for sudden appreciation or headline-driven optimism, but a carefully maintained equilibrium. That equilibrium sends a message to institutional observers. The system is being managed with awareness and restraint. In global finance, restraint often signals confidence. Countries that attempt to force currency movements usually invite volatility, while those that allow gradual alignment tend to build credibility. This is why the dinar's current posture matters. It reflects coordination between policy, market behavior, and economic reality. Rather than reacting to short-term sentiment, the structure suggests a long-term view as guiding decisions. For those watching closely, this alignment between rates, resources, and regulation offers insight into where the currency may be positioning itself in the broader economic cycle, not through dramatic shifts, but through steady, deliberate balance. Another layer that makes the current Iraqi dinar situation significant is the behavioral pattern of institutional and regional stakeholders who influence currency stability behind the scenes. Unlike retail speculation, which often reacts emotionally to headlines, institutional movement tends to be slow, calculated, and purpose-driven. At this stage, there is no sign of panic-driven capital flight, abrupt liquidity shocks, or disorderly adjustments in the Iraqi financial system. Instead, the signals point toward controlled monitoring and gradual alignment. Cross-border trade settlements continue functioning. Energy revenues remain structured, and banking operations show consistency rather than stress. This kind of environment is often where long-term positioning quietly takes place. When smart money evaluates a currency, it looks beyond surface numbers and focuses on sustainability, whether policies are repeatable, whether systems are functioning without emergency measures, and whether confidence is being preserved internally. The dinar's behavior reflects a system that is maintaining equilibrium rather than chasing attention. This is important because currencies that move too quickly often do so without foundation, while currencies that move methodically tend to retain value over time. In parallel, global capital flows are becoming increasingly selective, favoring regions demonstrating fiscal discipline and policy continuity. Iraq's current posture, reflected through its exchange management and monetary coordination, suggests an awareness of this global environment. The absence of sudden policy reversals or dramatic shifts reinforces the perception of calculated governance. From a strategic perspective, this phase often precedes deeper structural development, not explosive change, but steady groundwork. The market is not being forced to react. It is being guided to adapt. That distinction is critical. Smart money does not chase noise. It observes consistency, resilience, and intent. The dinar's current state reflects a currency being guided with caution, not urgency. This quiet control sends a message that stability is not accidental but designed. And when financial systems operate with intention rather than reaction, they tend to build the kind of trust that supports long-term positioning rather than short-lived speculation. Another key factor reinforcing the perception of quiet strength in the Iraqi dinar is the broader strategic environment in which these monetary decisions are unfolding. Globally, financial systems are navigating tightening liquidity, shifting interest rate expectations, and recalibrated trade relationships. In this climate, stability becomes a strategic asset rather than a passive condition. Iraq's approach appears aligned with this reality, emphasizing measured coordination instead of reactive adjustment. The consistency in exchange behavior, combined with steady fiscal management, suggests that policymakers are prioritizing resilience over rapid change. This is especially important at a time when many economies face pressure from inflation management, debt servicing, and geopolitical uncertainty. By maintaining a controlled monetary stance, Iraq positions itself as predictable, and predictability is a form of strength in financial systems. Investors and institutions often interpret calm monetary behavior as a sign that internal mechanisms are functioning properly, even under external pressure. The absence of abrupt interventions or policy reversals reinforces the perception of confidence within the system. Moreover, this stability allows economic actors, from importers to financial institutions, to plan with greater certainty, reducing speculative pressure. When markets sense continuity, they respond with patience rather than fear. This environment encourages long-term engagement rather than short-term speculation. The dinar's current posture reflects this philosophy, not rushing toward change but allowing structure and policy to do their work. In global finance, this approach often precedes more substantial phases of development, as stability builds the foundation for adaptability. The discipline being displayed suggests that decision-makers are thinking beyond immediate outcomes, focusing instead on sustainability and credibility. Such an approach tends to attract confidence quietly, without headlines or hype. Over time, this quiet confidence can become one of the most valuable assets a currency can possess, particularly in a world where volatility has become the norm, rather than the exception. As this phase continues to unfold, what stands out most is not dramatic movement, but disciplined positioning. The Iraqi dinar is operating within a framework that suggests intention rather than reaction, and that distinction is critical for understanding where things may be headed. Financial history consistently shows that meaningful transitions rarely begin with noise. They begin with structure, consistency, and patience. At this stage, the dinar appears to be in a period of quiet alignment, where systems are being tested, reinforced, and synchronized rather than rushed. This type of environment does not attract speculation. It attracts confidence. For observers who understand long-term financial behavior, this phase often represents groundwork rather than stagnation. It is during these periods that policies mature, institutions strengthen, and credibility takes root. The measured pace indicates awareness of both domestic priorities and global expectations. Rather than chasing momentum, the focus appears to be on preserving stability while allowing natural economic forces to operate. That approach tends to create resilience, a quality far more valuable than short-term excitement. As global markets continue to adjust to shifting economic conditions, currencies that demonstrate consistency and control often emerge stronger over time. The dinar's current posture reflects a system that is not reacting emotionally, but acting deliberately. This suggests confidence in the underlying framework and patience in execution. For those observing with a long-term lens, the message is clear. Progress does not always announce itself loudly. Sometimes it moves quietly, reinforcing foundations before revealing results. The Iraqi dinar's present trajectory reflects that kind of disciplined momentum, and one built on strategy, balance, and foresight. And while outcomes are never guaranteed, the signals being sent today point toward a carefully managed path rather than uncertainty. In the world of finance, that alone speaks volumes.